Joining me now is Tiffany McGhee, CEO and Chief Investment Officer at Pivotal Advisors. Tiffany, great to have you back.
Good to be back, Caroline.
All right, so Tiffany, the jobs report came in worse than expected today. The economy lost more than 20,000 jobs last month, yet the market is higher. Is Wall Street getting ahead of itself, or is bad news officially good news here?
No, listen, bad news is not necessarily officially good news. When you think about the labor market in general, it's cooling, but I think it's, kind of in a bit of like a healthy way, right? So we look at the data that we got earlier on this week. Initial jobless claims are really below 200,000. Layoffs are really historically low. And then, we also got those challenger job cuts, which also remain low. And so when we think about hiring has slowed, but companies are still hiring. So I think overall the fundamentals are still relatively decent.
So the economy is still on solid footing. What's the single biggest takeaway from all of this economic data that we got this week then?
Yeah,
for the retail investor, I should say.
Yeah, I think that, we always get these huge data points, and I think it's very unscientific, but I think that this is the cycle, right? We're going to have this news, and we're going to be tracking all of this data. I really think that at the end of the day, the fundamentals are still strong. The economy is still buoyed. Wages are still decent. So I don't think that this is going to hit us really, really hard. But there is that bit of like a shock value when we hear news like that.
So a shock value, except for the market's higher. So I think we should just make it clear that the market is higher.
In retail investors' minds sometimes, right?
Sure.
Yeah.
So the market's higher because the expectation is that the Fed won't have to hike rates if the economy is actually weakening to obviously combat inflation. Are you in that camp? Do you think that the Fed will just remain on hold, or do you think hikes still need to be in the picture?
Yeah, so I think that the Fed is very much looking at inflation, of course, but then also jobs. I think that there's a very good chance that they might still be on hold, but we're just going to have to wait and see. But I think that this is what the Fed was waiting for. Really that employment data I think was really important because there's been so much talk about inflation. So I think that they were really just kind of waiting to see about the jobs data.
When we think about investment strategy, last time you were on, which was the end of June, you were basically saying don't abandon the Mag 7, but broaden and diversify. Since then, we've had another earnings season still going on. Things like financials and industrials have hit new highs, and then we've also seen economic data like this jobs report. What's changed about your outlook now?
Yeah, nothing's changed. So technology has kind of dominated for several years. And, last time I was on, I was talking about how leadership is broadening. And broadening in terms of sector, broadening in terms of size and style. We're seeing, value outperform growth. We're seeing small caps outperform large caps. And we're seeing those sectors, leadership broadening in those sectors. So, so that it's just really a continuation of the theme that I was talking about.
Okay, so as we think about actual opportunities, let's go sector by sector. Tell me if it's still a buy, or if it's a hold, or if it's an avoid.
Yeah.
And if it is a buy, tell us some stocks that you like in that space. Let's start with tech.
Yes, of course. Definitely still a buy.
Okay, what names do you like in the space?
Yeah, so when we think about, everybody's talking about AI, of course, and so I'm really more so interested in the AI infrastructure, right? So not necessarily what AI is doing, but who is building it, right? I talked about last time the creators, the builders, and the adopters. So we're focused right now on AI infrastructure, but I also want to encourage investors. To think about the AI trade, not as a trade, but as a portfolio in and of itself. So, at Pivotal, we do a core and satellite approach. So if you were going to do that, if you were going to build a portfolio of AI, what would you have in there? You would have all of these different types of companies. So NVIDIA is in there, Broadcom is in there, Vertiv is in there, Eaton is in there, Constellation Energy is in there as well.
So all of those are buys right now?
Yes, especially Constellation Energy because it is down a little bit, so I think it's on sale.
Okay, moving on, industrials, still an opportunity there?
Yeah, definitely an opportunity. So, again, there are companies that are benefiting from AI as well, right? This AI theme really just spans it's huge. It's not just limited to tech. So names that I would like in that area. So GE Aerospace, Caterpillar. There's one Parker Hannafin. It's up 22% year to date. Also, Train Technologies. I've mentioned that before. It's up about 23% year to date.
Okay.
Yeah.
All right. Financials.
Yeah, so of course your usual suspects. We own and I like JP Morgan and Goldman Sachs. But again, thinking about that core and satellite approach, what else can we own? Two names that I like, KKR and also Apollo. So, typically, retail investors really can't get in on private markets, but this is actually a way that they can, right? And so, these two names are very strong in the alternatives category. And so kind of rounding out that, the financials part of your portfolio with these two names, I think would be great.
Utilities is the worst performing sector year to date. Is that an opportunity?
It could be. I mean, listen, we are talking about staples. So it could be. I think, it really comes down to the diversification of your portfolio and seeing if there's an opportunity to kind of like broaden exposure.
What about healthcare?
Yeah, I love healthcare, right? So healthcare is great. It's just, I think it's overall long-term a resilient sector. One of the things that, always comes up is like Lilly. So, GLP-1s, great. I think it has the opportunity to transform the entire healthcare industry. But yeah, I'm definitely bullish on healthcare.
Okay, with Eli Lilly being your top pick
Definitely,
there? Okay.
yeah.
And how about energy? Actually the best performing sector still year to date.
Yeah. So NextEra Energy is a company that I like. Again, thinking about how you can diversify that segment of your portfolio. Constellation Energy, I mentioned earlier. I definitely think that energy companies in general really stand to benefit from AI infrastructure spend as well. So NextEra Energy and Constellation are my two.
So out of that list, none were avoids. Is there an area of the market that you are avoiding right now?
So I don't like to paint a broad brush. So no, and so what we tend to do at Pivotal is really kind of go from like bottom up, top down and bottom up all at the same time, right? And so there isn't one sector that I would completely avoid, but I would really be looking at companies with lots of leverage. Companies who maybe have a lot of AI spend that have not really kind of like delivered on that in a very clear way, and with no hopes of that, So yeah, I think that's it's just about looking at the fundamentals of each company and making sure that they have strong balance sheets, making sure that they have, we also like pricing power. Those two things are very important to us.
Okay, so stocks have had a huge week. I was taking a look at the week-to-date performance. Still have a few hours left in today's session, but the Dow is up nearly 3%, the Nasdaq's up 4.5%, S&P up more than 3%, Russell up about 3%.
Yeah.
Is this a rally that investors should chase, or should they wait for a pullback as they're thinking about what I should do today or maybe on Monday?
Yeah, I mean, I think that there are always opportunities to chase, but again, you've got to kind of peel them off and kind of pick them off one by one. I always look at where you are in your portfolio right now. Have you rebalanced? Do you need to take some money off of the table? And so starting with, their individual situation, if there are names that that they see are kind of running up and they have high conviction around, I would definitely buy those. So I am not a always buy the dip kind of girl. I'm if I have a lot of conviction around it and it has great momentum, then I am probably going to buy it and hold it for a longer time.
Okay, so two-part question here. What's a stock you would feel comfortable buying today?
NVIDIA.
And what's one that you would wait for a pullback to actually buy?
Apple.
Okay. What's the biggest risk to investors over the next 6 months?
Concentration. That's it. And I know I talk a lot about diversification, but I think that is really the main risk. It's so easy to get caught up in hype, and not that AI is hype, but just excitement, and to tend to stay with like the same 4 or 5 names. And that is exactly what investors should not be doing right now.
What's the biggest risk to the rally?
I think potentially inflation, but I think about the second quarter, and earnings growth has really kind of pushed markets, right? More than multiple expansion. So when you think about the difference and making that distinction between earnings growth and multiple expansion, earnings growth is the actual revenue growth of the company. That multiple expansion is like the hype and what investors are willing to pay for whatever those names are. And so this past quarter, earnings growth really did a lot of the heavy lifting. And so I think that we've got a really healthy market right now.
So current earnings justify current valuations?
I think so, for mostly, yeah.
So you wouldn't look at this as a market that's too expensive here?
I wouldn't, because I look at some of these stocks and I say, do I want to own them?
Mm-hmm.
And if I don't own them, I'm going to buy them. And it really doesn't matter what the price is for me. And I know I hear, the peanut gallery going, but so I think it's a matter of, do you own them already or do you want to add to them? So I wouldn't add to things that are kind of pushing up against their 52-week high right now. But if I don't own them, I would certainly get into them right now. It just really depends.
What's one thing investors should do differently today than the beginning of summer when you were on?
I think that, looking at their portfolio to see, if they are invested in small caps, if they're invested in value, again, those two areas have really kind of helped, led growth this year. And I think that it's very common to have this, this S&P 500, just like ETF, and then maybe add a couple of stocks to it. And that's great. But I'm also a really big fan of kind of breaking that out, right? Mm-hmm. So using that core and satellite, definitely using some ETFs, but also kind of going into the Russell, right? Mm-hmm. Going into small and also the Russell value. I think kind of capturing that is just really important, not just kind of sticking with like the broad market like S&P.
So not too late to add international exposure or small cap exposure?
I don't think so, and especially emerging markets. So if people have not gone on that bandwagon, I think it's a good time to do that as well.
Okay. All right. I think that's a great place to pivot to our rapid fire game of this or that. You've played many times before. Quick questions, quick answers, no hedging.
Cool.
Are you ready, Tiffany?
I am ready.
All right, here we go. Jobs report, cooling or weakening labor market?
Cooling.
Fed rate hike, on the table or off the table?
Ooh, that's a hard one. I'm going to say off the table. Economy,
slowing or stabilizing?
You're asking me very hard questions, Caroline. So I'm going to say stabilizing because I'm not worried.
Okay. Recession watch, real risk or yesterday's story?
Yesterday's story.
Stocks, too expensive or still attractive?
Still attractive.
Add risk or reduce risk?
Depends on what you mean by risk. So I know that I have a very high risk tolerance for most things. So it's selective risk.
AI infrastructure or software?
AI infrastructure.
Chips or power?
Ooh, power.
One chip stock that every investor needs to own that's not NVIDIA.
So how I would do it, and you're not going to like this answer, is I would be investing in an actively managed tech ETF. That's what I would do.
A top power stock?
Constellation Energy.
Software name you'd add here?
Microsoft.
Almost said software name you'd add here that's not Microsoft.
Again, so I would, I don't know. You're making it hard for me right now. I have a brain freeze right now.
Would you play that as an ETF though too?
Like I would, what is it, the
IGV
yeah. So I what I really like in terms of strategy is I have my favorites, but what I really like is to diversify within the sector, within the theme, all of those things. So I would take whatever ETF is investing heavily in tech, right? Mm-hmm. And there are so many of them. I would again do that core and satellite. I would do a passively managed one, and then possibly like an actively managed one, so that they can kind of like lean into those opportunities.
Mag 7 or everything else?
Everything else.
Mag 7 name you'd buy first?
I mean, I'm not going to say NVIDIA, so I'll say Meta.
NVIDIA or Broadcom?
NVIDIA.
Moving away from tech, industrials or financials?
Ooh, I want both. But I'll go with financials.
Big banks or regionals?
Big banks.
Both picks, JP Morgan or Goldman Sachs?
I mean, now you're forcing me to choose. I do like both. At this point, I would just go eeny, meeny, miny, mo. They're both in my portfolio. But I think it's really more of a, JP Morgan and Goldman. I think they do a lot of the same things. But then I also like that idea of having like an Apollo or having a KKR, because that is adding something different to the mix.
S&P above or below 8,000 by year end?
Ooh, I mean, at least to 8,000. I'm going to cross my fingers and hope that it's above. I'm positive. Yeah.
How much above?
Just by a little bit. Maybe, maybe 81.
One word to describe the market heading into the fall.
Opportunities.
Finish this sentence. If I had $10,000 to invest today, I'd put it in
a diversified portfolio. I would lean heavily into small caps, into value, into emerging markets, and heavy into tech.
All right, Tiffany.
Healthcare.
All right, Tiffany McGhee, we'll get that in there. CEO and Chief Investment Officer, Pivotal Advisors. Always a pleasure. Thanks so much, Tiffany.
Thanks so much, Caroline.
If you enjoyed this Street Talk, check out our full interview with Matthew Tuttle. He says the lows are in and reveals which stocks he'd buy right now.